Well, folks, we are ready to get started. 3 at 3. Let's do it. 3 at 3 is where we bring you unusual option activity every business day. We're trying to meet that goal every day of bringing you something that's actionable and good content. But you need to know that, of course, educational, that's what this is. Educational, informational. A lot of folks who have been around the markets for a long time don't know about the sort of things we're going to be describing to you right now. So let's get into it. By the way, free live stream just an hour from now, literally at 4 p.m., right at the close. We're going to be bringing in our friend Tom Lee. He is the founder of FundStrat, and you might have seen Tom a few times before. Longer format interview. We're going to talk about what his best ideas are, opportunities in the market. Make sure you register. Just go to marketrebellion.com. It is free, completely free. All right, let's get into this. Crude oil. Look at that chart, folks. That's a waterfall, just whoosh to the downside. And of course, this is the June contract. This will be the one that'll still be here later this week. The other contract that people are watching that started at $12 and went all the way into negative territory big time, that contract won't be here. And there are several reasons for it. Number one, it's a long way from Cushing, Oklahoma to where most of you live. So if you buy this contract and you obligate yourself, you're saying, hey, you know, I have the right to buy X amount of barrels of crude oil. And you think you're a genius because you got paid for that, for instance, because it went into negative territory. Well, you might want to talk with the EPA about what the fine might be if they have to dump that crude oil, because it's your contract now when that contract is exercised. Also, since it is such a long way from Cushing, Oklahoma to wherever you purport to want to store it, you can bet that all the storage facilities in Cushing are pretty much spoken for, and spoken for at 10 times or more the normal cost. Well, so then you might say, well, I'll be a smart guy. I'll go send a truck down there, and we'll load up all those barrels of crude oil onto the truck, and we'll bring it someplace. Well, again, you'd have a problem probably with interstate commerce, because do you have a license to move this stuff across state lines? You'd have a problem with storage. Do you have an approved storage facility for this? Because again, when you're talking about taking delivery of commodities, folks, this is something that is not for the faint of heart. And the people that do this are the biggest of the big. This is Valero on the refining side. This is General Mills if we're talking about corn or soybeans, Kellogg's and the like. Most of us do not ever want to take delivery of an entire freight car filled with corn, bushels of corn or soybeans or whatever. So those are things you need to be aware of in case you're thinking, maybe I'll get in here and buy some of this. Now, I know most of you who are talking about this are kind of joking, thinking to yourself, well, yeah, this would be kind of funny. But there are a host of problems with taking delivery of any contract, in particular this one. Now, take a look at this. This is from the CME just moments ago. I've been trading this all day long, as I said early in the morning, and it's been a fabulous day to trade crude oil. Now, of course, you can trade crude also over at the ICE, the Intercontinental Exchange, but this is the big dog. So take a look at that. The June contract, Globex volume already over 1 million contracts have changed hands in that June contract. And then you see that they have an E-mini contract for June out there. It's traded 71,000. Gives you an idea the size of that big institutional size trades that can take delivery, or at least they have enough capital to trade this thing, versus many of us who cannot take delivery, do not ever want to take delivery. That's the E-mini side. The big guys are on that 1 million contract side on the much bigger contract. But as you see, down $3.98 on the day. High of the day, 25 bucks, let's call it. Low of the day, 20 bucks, let's call it. Rounding both of those, but let me have a little leeway here, folks. And that is the June contract. The May contract we've already discussed has gone into negative territory, and for a host of reasons that I touched on. Now, let's talk about the rest of what's going on. Whoops, I'm getting another fill here. Hold on. Yeah, there we go. Bang! Love that. All right. Here's what else is going on, folks, as far as the rest of those trades. Let's take a look at 3 at 3. So, this is NVS. As you can see, it's a $91 stock, NVS. Nice trade in here today. NVS, which is a foreign-based drug maker, Novartis. I believe, let me see, where did they move the headquarters to? See if I see that on here. Switzerland, thought so. So Switzerland, they develop and manufacture healthcare products worldwide. You guys know the story. They're up 1% against a down market, trading $90.12. As you see, 90.31 was when we saw the activity. January, 120 calls. The 52-week high right now is 100. So this would be well above that, but it's all the way out in January. So again, May, June, July, August, September, October, November, December, January, 9 months out. So 9 months out, somebody wants to own 500,000 share equivalent, and they're paying from 30 cents up to 80 cents. So they kept paying more and more and more as they chase these up. There's a graph of the stock where it's been over the past month. So you see on the lows, it was 70 bucks. It's moved back up to 90. Bang, that's the first of our 3 at 3. Second one, take a look at this one, XLE. Oh, what a shock. They're trading the XLE today. Yeah, and so am I. And I've been trading puts in here all day. XLE is the Energy Select part of the SPDR, the Spider. Now, if you've not followed us before, Spider is, they break up the S&P 500 into many different groups. You've heard of the XLF. All of these, by the way, have X's in front. So the XLF is the financial. XLE is energy. And XOP is things like crude oil, as far as, you know, exploration and so forth. Not XPO, but XOP. Anyway, this one's the XLE. And the XLE, when we saw this unusual activity, we saw bearish unusual activity at 30.21. That's the strike price. I know it's a weird strike price, but the stock or ETF was trading 33.68. Where is it now? 32.61. So it's down more than $1. It was 33.68, as you see. We've already profited somewhat in this trade, and we're betting that maybe we retrace and go back down to 30. I'm not saying we need to retrace all the way back down to those lows in March when it broke 24, but this one, they're buying a fair amount of puts, buying the June puts. So again, 3 months out into the future, basically, and they're paying $2, which is $200 for 11,000. That's 1.1 million share equivalent at 200 bucks. So in other words, 2.2 million share, $2.2 million. That's why we pay attention to these trades. Next one and last one of our 3 at 3 is DFS. So let's take a look here. DFS, I got in here as well. I'm in all 3 of these trades. Discover Financial, it's a little softer today. Stock was at 35.36 this morning, and they were buying the May 40 calls. So that's $5 above the market, right? $5 above the market with the stock at 35. Paid 130 bucks for each option that they bought, and there it is right now. Whoops, that's Pinterest. What did I have that there? DFS. Shoot, I meant to have Pinterest. Sorry, folks. Let's see, Pinterest. Why did I hit the wrong one here? Give me just a sec. I'll get Pinterest up there. Don't know why I had DFS up there, but I can fix this. Let's see. Here we go. Pinterest coming at you, folks. Oh, you know, That's why I had DFS up there, because the Pinterest is so short term. It's only the April 24th. So anyway, let's instead just go with this one, DFS, because it was bullish call buying of those May 40s, paid 130 bucks a piece for these. So we joined them, bought those for 130 bucks, and I spread them off almost immediately as it started rallying and sold out a higher strike above it. So I put myself into a bull call spread, or a call vertical spread in the case of DFS, which is Discover Financial. This is, of course, credit card play for Discover Card. And it was way over the open interest, more than triple the open interest. That's why we liked it. And I'll probably be in these for about 2 to 3 weeks. That said, folks, I hope you have a great afternoon. Sorry about that little bit of confusion that I had putting up the wrong Pinterest in there, but I hope you join us in about, let's see. Right now it's 45 minutes from now. We will have Tom Lee joining us for unusual option activity and live stream of our volatility roundtable. Check it out. Join us for free. We will replay it, but if you want to ask a question of Tom Lee, something you rarely get with televised interviews, we can get you that question on air with us if you're part of the live stream. If you're not, well, I think you'll still get a lot out of it, but you won't be able to ask a question. Thank you. Have a great afternoon, and I hope that with all the craziness around crude, you did okay. Thank you.